Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, welcome to the COB. I'm Juliette Sarli. Great to have your company, I should say. I made myself laugh just before we went on air, and you know when you sometimes breathe the wrong way? I'm worried that I may not be able to get through my monologue, but bear with me. Let's have a quick look at where the local market is, and I shouldn't have made myself laugh because we are down by 1/3% there on the CBO 200, the ASX 200, about 1/3% lower as well, 26 points, 8,952. A lot of upside coming through in tech players, the info tech sector up by about 7%. Financials and energy stocks, though, under pressure because, of course, we've been monitoring this very concerning hit to Australia's fuel supply, particularly in Victoria there on the refinery fire in Geelong. Although in the last hour or so, Prime Minister Anthony Albanese has announced the government has secured an additional 100 million litres of diesel from 2 new shipments, saying that one is coming from Brunei, where he was yesterday, and one from South Korea. This as the Prime Minister is in Putrajaya today. Well, of course, we have been monitoring, though, this fire to the fuel, if you will. We do believe it is under control, the Viva Energy refinery fire in Geelong, but it's one of only 2 operating refineries in Australia. So the CEO has already told the ABC today that he is expecting that there will be a hit to Australia's petrol supply, and it couldn't, of course, have come at a worse time. Meanwhile, as we mentioned, we are seeing weakness on our market despite Wall Street highs, an 11th session of gains on the Nasdaq overnight, and of course some really solid upside coming through in tech players, but our market was under a little bit of pressure, mainly due to the likelihood that we are probably going to get a rate hike coming through again in May, and that's due to the fact that so many of us remain employed with that solid work thematic there on the back of the jobs data that we saw. So the market continuing to price in a rate hike for May, with unemployment remaining steady at 4.3% in March. There was a net increase of close to 18,000 jobs for the month, driven by full-time workers. This was partly offset by a fall in part-time employment at the end of summer. Now, I spoke to Paul Brennan from Suncorp earlier about the resilience of the jobs market.
Below the surface, what it's telling us is that the labour market is still relatively tight going into the war and the crisis. So, for example, the fact that the unemployment rate is still steady at still a low level of 4.3%. The RBA thinks that sort of full employment is probably a little bit higher than that. And then secondly, the fact that the participation rate actually fell a little bit just tells us that it's getting a little bit harder to find new workers to come in there and sort of take the jobs that are still available. And then the third factor is that more people were working longer hours, which also tells us that there's still underlying labour demand out there from companies and businesses and governments.
Well, that was Paul Brennan from Suncorp speaking to me earlier. Now, looking ahead, Sarah Hunter, the RBA Assistant Governor, will be speaking at the IMF meetings overnight. The Aussie dollar has really surged, though, on the back of the expectations that we will see another interest rate hike. It's nearing 72 US cents. Let's have a look at some of the energy players today amidst that refinery fire. You did see Ampol, which is the owner of the only other refinery in Australia, surge at one point, but it's closed pretty flat. And then, of course, the weakness in the oil price. Also a bit of C-suite news at the Santos AGM weighing on its share price there. I mentioned tech stocks looking incredibly solid today. So WiseTech up by more than 12%, as was Life360. Don't forget Zip has a quarterly update tomorrow. Tech One up by 6%. NextDC and Megaport also looking very good. But the banks did see some weakness today. CommBank dipping below that $180 level, $178.38, down by 2.5%. Westpac, ANZ, NAB, and Macquarie Technology also coming under pressure there. All right, well, of course, we talked about firefighters saying they have extinguished that Viva Energy oil refinery blaze. Its share price was in a halt today, but Santos there under pressure, as I mentioned. The chairman, Keith Spence, announcing he'll be departing in April next year. Ora Banda looking pretty good. a month high, in fact, on strong quarterly gold production results. Orica, due to the fact that ammonia plant outage hit its production, and net wealth looking really good after reporting total funds under administration approaching 126 billion. Well, Virgin was up by more than 4%. Citi actually upgrading the stock to a buy. It sees minimal impact from the Mideast conflict. Don't forget, of course, that we had that update coming through from Virgin yesterday saying that it's pretty well hedged due to those higher oil prices. All right, let's welcome to the COB Josh Gilbert from eToro, who joins me now. Josh, always great to see you. So our market not really playing follow the leader to Wall Street today.
Yeah, good to be with you, Juliet. Look, I mean, I think it's one of those where we've seen the Nasdaq rally really, really hard over the last, I think, 11 days now. So a massive streak that we're seeing from the American markets, and of course we don't have that sort of same exposure here locally to the sort of the tech sector. Yes, obviously we're seeing those winners on the ASX today, obviously coming from tech, your Wise Techs, Zero, Life 360, etc., all rallying. But we're still in a slightly different position locally, right? Where you've got the US economy that's still pretty resilient at the moment. No sort of rate hikes in question for now, whereas you've got an RBA here at the moment, which looks increasingly likely to sort of raise rates. So I think we're sort of sat in a different macro picture at the moment. And I think that's probably why, between sort of the tech exposure and obviously a slight divergence.
Yeah, definitely a divergence. You can see there, though, as you point out, though, those tech players looking really, really solid. Josh, Zip is due with an update tomorrow. What do you like in the tech sector?
Yeah, I think, look, we're really looking towards obviously that AI boom, and I think continued weakness in any of those areas for us are going to be where we see investors looking to. I think if we look at history, it tells us that geopolitical crises, often turn out to be, great opportunities for investors. I think what we're seeing markets at the moment, I think the risk here at the moment is that markets are almost trading as if this war is effectively over, that this conflict is finished, given, we're basically back at record highs. But, on the risk of that, the ceasefire hasn't extended yet. So I think we're seeing selective buying through tech names. For example, we've seen things like ServiceNow, for example, from a stock perspective, that have been hit by this SaaS apocalypse. Investors sort of turning to names like that. But we're also continuing to see investors sort of rotate towards your Nvidias, Microsofts, Googles, those names that are really sort of at the front of this AI boom at the moment.
Yeah, absolutely. Would you be looking, though, when you say, you can make money in a downturn, at maybe some of the stocks that have been really hit hard since those highs that we saw in February? And if so, what are any of those that you haven't touched on?
Yeah, I think it's about being selective, particularly more than ever. I think there's no greater example than the Allbirds news that we had overnight, right? When you've got a shoe company rallying as much as 800% overnight on the fact that they're changing from a shoe company to, now become an AI infrastructure company. I think it just goes to show that we are sort of seeing a fair bit of hype within AI at the moment. You can't just simply become an AI company by just saying, tagging AI onto the end of your name. So I think there's a real, again, going back to divergence between those companies that are, seeing real cash flows, real profits and real monetization from AI. And I think that's where we're sort of telling investors to sort of really try and focus at the moment, is looking at sort of the real picks and shovels of this AI boom, whether it's from the cables, whether it's from the power, whether it's the cooling of sort of AI data centers, those types of things that are building this AI boom. That's what we're particularly looking at. And then also in the software space as well, of course, that SaaS apocalypse is obviously coming through, but there are certainly names in that space, that aren't going to be killed by Claude and by AI, right? It feels like Anthropic are coming out with pretty much something to kill a company every single day of the week. But there are plenty of companies out there that, I think Salesforce is a great example. It's been hit particularly hard by what we're seeing from AI. But really, when we think about, Salesforce, it's a business that's been around for decades. Its CRM system, its data, it has this history and data that AI will never be able to match, and in terms of security, those types of things, we think that it's sort of overblown. And then I think you can even look to things like a company like Booking.com, for example, just as an example, right? Sold off particularly from the example of AI killing online booking companies. But at the end of the day, AI quite simply can't do everything that a company like Booking.com can. It can't handle complaints, it can't handle bookings, it doesn't have a payment system. At the end of the day, you still need a back end. So we think that there are certain businesses that are being oversold at the moment. Of course, AI is going to change the way that we see these companies, but it's certainly not one size fits all at the moment.
That's super interesting. Second person in an hour, I think, that's told us about Booking.com, Josh. And just a quick word on what you think in terms of the fuel disruption, because Moody's has just said, look, they don't really see too much impact to Qantas. We heard that from Citi with Virgin. Maybe people are kind of right in thinking that the war, is coming close to an end and there won't be as much disruption as was feared.
Yeah, I think signals are probably cautiously optimistic in the position that we are right now, and I think markets are telling us that. As I said, Nasdaq rallying for sort of 11 days straight. Again, we could see a second round of peace talks coming in the next few days, that extension to that ceasefire as well. And I think that we're seeing both nations come to the table at the moment in terms of Iran and the US, and that obviously that prospect, that expectation is obviously giving us a bit of a lift. But I think really what we need to remember here is the reality is, and something for investors to take away, is that we have been in this position before, and until there is a concrete resolution, I think we need to expect that this kind of two-way volatility to stick around. I think that the key point to that, though, is that although it has been a volatile period for investors, and we're sort of seeing markets really test investors' patience, I think that we're seeing investors become more resilient, particularly over the last sort of few weeks. Again, we're seeing markets driven by headlines, but I think we are being more accustomed now to actually navigating these environments rather than seeing investors panic or react to them short term. So I think that where we would have seen sharp sell-offs earlier in the conflict, I think we're seeing those headlines being digested far quicker, less panic coming through the market. And I also think this sort of type of geopolitical uncertainty has kind of been the new normal ever since really we had sort of the Russia or Ukraine situation a few years ago. So I think it's being thrown at investors. They're taking it particularly well at the moment, especially in such a headline-driven market. But as I say, wouldn't be getting too carried away. We know with Trump, for everything from tariffs, the taco trade, headlines are changing on a dime. So it's really important that we don't get ahead of ourselves.
Yeah, gosh, we've been through a lot in the last 5 or 6 years, haven't we, Josh? Thank you so much, as always, Josh Gilbert from eToro. Well, the stock of the day on that fuel refinery fire was Viva Energy, and we had our experts Jonathan Takadina from MPC Markets, Howard Coleman from Team Invest.
Even before we heard that the fire had broken out, Viva Energy wasn't a company that passed our filters. Its return on equity on average has been well below 10%, which is our minimum requirement. So it's the sort of company that Team Invest members would look at and say, well, it sounds like a good story that it's very important now that we have the problems in the Middle East. But in actual fact, this company's not going to be a wealth winner. So I can't imagine any Team Invest members seriously at any stage considered owning it.
The stock itself is going to get a nice hit. But I think that will be an opportunity to buy it. And the reason I do like it long term is that I just think energy has been mispriced. We've taken energy for granted for so long. We haven't rewarded the energy companies, it's been demonized. And even though we are trying to transition more to renewables, fossil fuels are still our baseload power, our very essential in terms of transport and things like that. And even if we chuck infinite amounts of money at it, it takes time to transition.
You've worked hard for your money all your life. Now your money needs to work hard for you. Whether you're building, transferring or drawing down, the right information makes all the difference. At Ausbiz Retire, you'll find the latest news and insights from trusted experts all in one place. Ausbiz Retire is powered by RAN, retirement income done differently.
All right, well, our market certainly underperformed those record highs we saw on Wall Street overnight due to the fact that we are probably facing another rate hike. Let's have a look at some of the leaders, though, and they were all mainly in the tech space and, of course, Orabanda that we talked about earlier in the materials sector. Life 360 and WiseTech both up by more than 12%. Zip ahead of its quarterly update up by 11% today. And Pro Medicus there as well, up almost 9%. The laggards in today's session included quite a few of the gold players, as we saw a dip in gold futures, also Reece and James Hardie. Let's have a look at the small end of town, and Invictus Energy had a very solid session, up by some 23%. Calix there as well. And on the downside, in the small end of town, again, some gold players coming through. Austral off by almost 9%. Tonight we get US first quarter earnings from the likes of Netflix, Pepsi, Charles Schwab, Marsh McLennan, so quite a lot there to give you an indicator of how the overall economy is faring. And UK GDP expected to edge up by 0.1%. Another interesting fact, just while we stay on the UK, the Taiwanese stock market has today overtaken the British share market as the 7th most valuable in the world, and that you would probably imagine is due to TSMC. Let's have a look at what's happening more, I guess, locally tomorrow. We've got those quarterly updates from including Alcoa and Zip. So the end of the day's trade sees us here down 1/3% on the CBO 200. The S&P ASX 200 closing down 24 points, 1/3%, 8,955 points. And one more thing that I forgot to mention today was China reporting its first quarter GDP growth of 5%, suggesting somewhat limited spillover so far from the Iran war. Massive amazement as how it always gets to its 5% target. All right, we will do it all again tomorrow from 9:45 a.m. Eastern. See you then.